North Korea is also doing a couple of things. So what is the Nigerian economy and where are we today? So we said growing mildly, right? And impediments remain. So GDP 3.46 is quite significant. But not only that, it went first quarter, second quarter, third quarter, growth. If you compare quarter on quarter, there's been growth. If you compare to the previous year, there's been some growth. Inflation, 33.88, but we think it goes to about 34, 35. Unemployment, depending on how you define it, the methodology is different. It has dropped from 5.3 to 4.3%, but it's unemployment is defined as anybody who has worked for 1 hour in a week, right? So he's employed. Therefore, if 75,000 naira is your minimum wage, and you divide it by 40, right? Because you're doing 40 hours, then you get, and I don't think you can even survive on that. The budget went 48 trillion naira announced, but when I looked at it closely, the budget of last year was 30 trillion. Then we added 6 trillion as a supplementary budget, making it 36 trillion. So it increased from 36 trillion naira to 48 trillion naira, which is 12 trillion. 12 happens to be 33% of 36. 33% happens to be the rate of inflation. So somebody said, okay, it's too much trouble to start analyzing the budget. Why don't you just add the rate of inflation to the budget, and that becomes bingo, your budget for 2021. So, this is snapshot. 3.19, 3.46 up. Q1 2025, we're looking at 2.8. Exchange rate official 16.19, 1619. Q4 1714. Right? The official is 1619 to 1677, but parallel yesterday was 1753. Now, the exchange rate in the budget of last year was 800 naira, and we ended at 1700 naira, or let's say, take our argument, 1600. So if we are wrong by the same ratio, because this time the budget is based on 1400. So if you use the same proportion of deviation, so when you were 800, you ended up at 1600, double. If you, I'll say 1400, if you do double that, what do you get? 2800, right? God forbid. So, current account balance, which is interesting, has gone from $3.38 billion to $5.14 billion. This should be the major thing driving your currency. Therefore, this is green. If this is green, typically that other one should be green or at worst amber. The trade balance, 5.2 to 6.95. Those two should be able to tell you, those are green. Therefore, why is this green producing red? Inflation, 32.15, 32.70. MPR, the interest rates, 27.25, and 365-day treasury bills are now effective. You're having 23.5% green. So there's some contradiction here, because the fundamentals are showing strength, while the markets are showing weakness, because there's a credibility gap between data points and belief. Gross external reserves, interesting, green, but everywhere in the world we use net external reserves, not gross. So so you can, like saying that profit before, not profit, but gross profit, nobody judges it after. The bottom line is the bottom line. That's it. So that's a top line. We can't compare top line. Stock market capitalization, which is stock prices are the present value of future earnings. is showing. But if you look at the earnings that were announced by top 10 companies, exchange rate losses based on last year's rate, official rate, and by the time you take this year's exchange rate losses into consideration, this stock market capitalization cannot hold. Correction is imminent. Pension assets gone from 20.48 to 21.13, but interest rates increased. Therefore, interest rates, marginal propensity to save is a function of interest rates and income. So why are pension assets only growing marginally while interest rates have grown sharply? Because the investment culture and the spread. So you still have negative rates of return. And people are not foolish. So what are they doing? They're converting their Naira balances into dollars and putting in their DOM account. They're taking those DOM account monies and buying diaspora bonds, getting the 9.75% per annum return, where the rate of inflation is 2.6. So they are 7% ahead of US inflation. So if you add that 7% to your rate of inflation, effectively the guy is getting 40%. So all you have to do is to go to your bank and give me my Naira and go sell to the Malam, bring the dollars in, and you move from 8% below inflation to 10% above inflation. All you have to do is walk out the door of the bank and come back in. So, crude oil production, there was an announcement today that 1.8 and 1.5, so 1.8 was what was announced as oil production. Then today, the methodology changed and we have 1.3. Price of oil, 74, but now 71. But again, one of the assumptions in the budget was that the price of oil will be $75. That's the benchmark. Normally, there's about $5 or $6 headroom between the spot price and the benchmark. But now, from day one, the benchmark price is lower. Now, it's higher than the spot price. So there'll be no excess crude. So there we go. PMI, another strange thing, the PMI is contracting, which Purchasing Managers Index, while the GDP is expanding. There's a problem. But again, of the 46 activities monitored by the NBS, 15 expanded and the others actually contracted and slowed. So, again, inflation increased for the first time for some time in 2 months and will increase again next month. CBN will continue with tightening, focusing, and it's become clear that the exchange rate is a more potent driver of inflation than interest rates. Two, of the 13 variables monitored, 8 positive, 5 negative, so that's 62% and 38% negative. The stock market, so the PMI is actually not measured in percentage, it's a unit figure. Once it's below 50, it's contracting, and once it's above 50. So the exchange rate has depreciated consistently. So it was 810 this time last year, and it's now 1750. So if you go back to look at 3 or 4 countries: 1, South Africa; 2, Ghana; 3, Kenya; and 4, Nigeria. You find that inflation, Nigeria's inflation is higher. Nigerian interest rates are not that high. Nigeria's GDP is growing. And each of these countries had debt problems, but none of these countries, when you look at the exchange rate differential, Ghana had maybe the worst. Ghana was about 22%, but Nigeria was 47% depreciation in the currency this year alone. South African rand, 14, 16, CD 11 to 16, Kenyan shilling, same thing. So nothing suggests and can justify a currency to lose half of its value when there was no earthquake, no volcano, no war or nothing. So how come? What is responsible for this major? So that's 2. We announced the petrol price reduced yesterday or day before, to 970. Dangote says 970, but okay, if you evacuate by water, but coming here, they're selling at 1080, right? So the argument is that they already bought the petrol at a higher price, therefore they want to finish there. But if it was an increase, they were automatically, within seconds they would have done that. So there's going to be a lot of data announcements, and the more the inconsistency in the trend, the more people even don't believe that which is credible. So we'll wait and see. At 2 o'clock we'll hear the announcements, but again, something has to be done about the exchange rate management system, because the fundamentals suggest that the exchange rate should be much stronger than where it is. So this is just the GDP growth trajectory, and you can see from Q1 2022 here all the way, and then we are now here. This is where the forecast is, but it's still high compared to the rate of population growth. What did we see? We saw service sector, industry, agriculture, and trading. The three areas that employ people most all actually showed a decline in activity. So one thing is to have growth, the other one is to have growth that carries people who are getting the employment factor. So that's a major issue. Well, 15 expanded, right? And if you look at the sectors that expanded, crude, petroleum and natural gas, food, beverage and tobacco, financial services and insurance. So crude, petroleum, because of insecurity, what happens here is that it is not necessarily because the security apparatus is much stronger in combating vandalism. I went to Warri for the first time in 4 years last week. And now the thing is this, that the premium, once the global price of oil drops below a particular level, the negotiation premium between the militants and the people who are off-taking it drops. And therefore the incentive to vandalize the pipeline and sell into a market is lower. So for you to say, oh yes, they take pictures of army and navy, no, that's not the truth. The truth is that it's a very comprehensive ecosystem. So the money, the oil goes into a mothership goes into then refineries buy it and all of that. And don't forget, you're also having a excess supply of refined products here as well, which is leading to the price drop. So we are seeing that. Banking and financial services, again, all the banks were doing was take money from BOI and give to the customers, have guarantees and come back. Now, because the price of money at the central bank window is becoming so expensive, so we are beginning to see that. But now, so this is still carrying, and carrying assets. The profitability of the banking system is dependent on the exchange rate gains. But the exchange rate gains are defined in two ways. If I lend money to somebody to drill oil, and I'm still carrying it as a performing loan, so the asset will be marked up at 1,700. The day the man defaults, I will also have to take a loss in the higher exchange rate. So the big exchange rate gains today are going to be massive exchange rate losses tomorrow. Food, beverage, and tobacco, yes. All the ships that came to take advantage of the duty waiver and all of that are beginning to come in, but we are beginning to see price differential, but not happening. I think Modi came in. After Modi visited, we saw the price of rice drop, and India lifted the ban on export of rice, and so we have rice selling today at 105. It was 120, 125 2 weeks ago. So, but again, trading down, manufacturing down, agriculture down, higher output on fertilizers and so on. So these are the sectors that slowed: cement, trade, crop production. And interestingly, the price of chicken has dropped, frozen chicken, but the price of eggs have increased. But again, they come from the same. So why would the price of chickens flatline and why would the price of eggs increase? Simple answer. There are three types of chickens. There are broilers, layers, and what they call it, cockerels, right? The cockerels cannot produce eggs. Commercial layers produce eggs, and the broilers produce day-old chicks, eggs for hatchery. So you only 1/3 of the chickens produce eggs for the market. That's why the eggs are 6,000 or 5,500, while the chickens are 5,000.